they look at our fund balance. The good thing is, we do have a fund balance policy in this board, so 130 that says we keep 3% of our expenditures minimum. They look at total fund balance, it's a little higher than that. But this state, districts have lower fund balances because of the way we're funded than a lot of other states. So they really look seriously at that, and they continue to look at us and say, we'd like your fund balance higher. Our response to them is, if you look at our fund balance, we've got a policy. If you look historically what we've got, it's kind of stable where we are. You don't see major fluctuations. We manage it well, so we're pretty stable, and we ought to keep our ratings right where we're at or higher. So we push to go up, they push to go down, so it's one of those things we go back and forth. So that'll be part of the whole conversation, and then we gotta wait a couple of weeks for them. They go back and analyze the numbers and see what they've got, and they come back and give us our bond rating. And just, if it means anything, Moody's is an AA2 rating, and or an AA1 rating, I'm sorry, and Standard & Poor's is an AA minus. They're just a little different, just about the same. But so that's the two ratings we get. We'd like to at least maintain those ratings. And
that's the highest you can get, or AA?
No, it's a,
no, for us as a district.
well, you know, there's other districts that are higher. Like Washington's higher, Bellevue's higher.
Because they have
a lot of it looks,
businesses.
your assessed valuation.
Right.
They look out there and say, they look at the community support, what happens, they look and go, oh my God, look at you got Microsoft, Google,
But wasn't there 2 bond failures, they have a higher rating than we do.
Yeah, and now, they haven't gone off for sale, I haven't looked at them lately, they haven't been downgraded. But when you look at the assessed valuation, what they got, especially the commercial stuff, is amazing, yeah.
Right.
Yeah, I don't know, they haven't sold a bond in a while, because when they didn't pass their last bond, they went through a levy to get the money, so therefore didn't need a bond sale, so it'll be interesting to look.
Oh, they
but-
did, they went through a
They went for a levy, and they cut it down a little bit from what they initially asked for. That was 4 years ago when they went out, so. But that's what they look at, it's an assessed valuation. I think we're maxed out with the assessed valuation we have. I mean, we get excited when Costco opened up a few years ago. I mean, so we like it when industry comes in and commercial businesses come in, because that really helps us, so. Yeah, we get a pretty good relationship with those folks, and we've been so often with them that I think we get to know some of them as we talk to them, so. Next, the preliminary official statement will mail out to potential investors, and Piper Jaffray will take care of that, so people are interested. A lot of the investment, some of the big companies that buy our bonds, pardon, yeah.
State Farm.
State Farm, yeah. Money market folks or whatever, a lot of it's sold in retirement accounts, which is interesting, school district bonds, because they're stable. We see a lot of them down in Florida that pick them up. And the nice thing about Piper and Jaffray is they've got connections all around, and we sit there and we'll sit there and watch the bond sale. If you can make it, we'll take you over. It's not real exciting. You get excited saying, yeah, some bond sold, and you sit there and go, hey, so it's
I want to go to that.
but it's, and it starts it starts at 7 in the morning. We start off, we're over there at 7, because that, at 10 o'clock back east is when everything opens up. So they're ready to go. They've got the trading floor out here. They've got a lot of preliminary stuff. Actually, the night before, we will sit here and work with our financial advisor and the underwriter and look at market conditions, what our rates look like. Are we still gonna go for the next day, and we get comfortable with that. We set the rates. Next day we go in, we have the sale. So, I'm working down here. Once we do
When,
that.
about when is that? That's when.
That's
after
what we're shooting right now is May 7th. If you look at, that's the date we're targeting right now.
Yeah.
May 7th is the actual bond sale. So we would go over in the morning with those. Hopefully the bond sale lasts an hour, hour and a half. That makes you feel good. That means your bonds are moving out pretty good. Sometimes if we're selling 80 million, maybe there's 5 million left in 1 year and 2 million another year. Piper Jaffray will step up and say, we'll buy the bonds ourselves. And then they put it in their portfolio and they will sell it on later. So that day, after we agree to, we come back in, since you've delegated the authority to Larry, Piper Jaffray will come over with the final bond sale agreement. We'll sign everything. Our action is done. On May 9th, that Friday, in the board briefing, we'd like to give you a recap, including the financial advisor's recommendation, which Larry will have before he signs the document. What happened, what we saw, what his recommendations are. And usually he's going to say go. If he doesn't say go, then we're going to back off, but he's with us. And then I would bring you up to speed on everything that happened. And then on June 4th is about the time that the closing happens and all the funds transfer. So there's a lag between when we sign it and when the actual money transfers back into the bondholders. So That's the bond process as we see it, a lot of people involved. We got some sharp people, the underwriter's been doing this for years, pretty solid, pretty knowledgeable. Alan Dashin's been doing this for about 30 years too, our financial advisor, so.
The thing that Alan would do is if, you know, you have 5 million in the year 2025 and they're not selling, they can, you know, quickly work with a financial advisor and say, okay, if we move this to the year 2030, the same series to the year 2030 at this interest rate, is this more palatable to some investors, and then maybe they'll get sold when they've been rearranged a little bit.
As we talked, as we structure the bond sale, they all don't mature, we have different maturities throughout the life of them, and again, we talked about that, trying to keep stable our debt, so we will do that structure at that point. And when we get done, as Lydia says at the sale, we may wanna say there were more popular, more people wanted the previous year, so we'll move some of those bonds back and forth, and that's decisions we make sitting down at the table when the bond sale's going on.
So, that's fairly lengthy reading, the resolution and approving their official statement, so will you get that out to us as soon as it's available?
As soon as I get it, the resolution will be to you, I'll get it to Jan by the Tuesday before the board
Yeah,
meeting.
you have like.
So usually it shows up in the board package, we
Right.
try to get it to you earlier,
Yeah.
and I can send it to her in an automated form right now, so we'll just kick that out, get an email. The preliminary official statement's it's kind of fun reading, I mean, I just put it out there to read it, the resolution's the one you actually sign for.
Right. Any questions for the board?
Well,
Really quick question,
Sure.
and just curiosity. So, you know, you're talking about the time limit to conduct the sale, you know, the 90-day window. So I'm assuming that in our capital fund already, we have money from previous sales to cover, you know, like the summer construction, things like that?
Yeah, so part of what we typically do is we put a cash flow spreadsheet together,
Okay,
and we're looking at how we're managing our money and at what point we think we will start tailing down on the low end of our cash flow.
okay.
And that's part of the discussion that we're having with Dick is, we think we can manage $80 million over this period of time. And then, that's all we can manage right now.
And until
based on
the sale, until the funds transfer, you're good to go for the summer, the steel purchase and all that stuff?
Do we have a projection of when we anticipate the second sale?
You know, the $80 million assumes a 24-month spend down. The IRS allows that, allows you to keep any excess interest income that you earn if you can spend down within 24 months. So we're shooting for $80 million within 24 months. But it could happen in 18 months, so we have that kind of.
Then we'd be back with another bond sale, so
Yeah.
we still got that capacity there.
Any questions? Thank you very much, always interesting reading when we get it. Thank you. So at this time, the board is going to recess to